Okay, we're back. Um, I think we're now ready to go to analyzing the markets. Yeah, let's go analyze the markets and maybe see what's happening. We remove 22. Wow. Okay. This is crazy. This is crazy. Okay, analyzing the market is not like how do I say it? In order to analyze the market, you have to like how am I going to analyze this market? These are the questions I'm going to ask myself. Like, I've already analyzed today's market. Say, no. We're not going to line. We're going to line about time frames and then we analyze the market. There's something known as time frames. Time frames, okay? See, when I press number 4, see, change interval. This is 4 minutes. There's a lot. When I press 4H, oh my god, no. Not even there. Not even going far. They're here. See here. 5 minutes, 15 minutes, 1 hour, 4 hour, daily. And then I click there. There are lots of them. Like these lots of them. That's if you want to add one day, put the star there and then you should come here up. The best time frame to trade is the higher time frames. The higher time frames are the best ones to trade for. The 4 hour and the 1 hour. Because when you go to the lower time frame, the lower time frames they're just noises. Just noises. Too loud here. There's a lot of commotion going on, and I won't recommend you to trade the lower time frames. The best time frames are the 1 hour or the 4 hour time frame. These are like the best time frames. But for you to hold trades on this time frame, you have to be patient. This is where patience and discipline comes in because you really have to be patient. It's a non-negotiable deal. Okay, so let's talk about let's see how am I going to trade this on the 4 hour time. Look, first we go to the daily. What can we see on the daily? The market is like this. The market seems to be on somehow going downwards, and then now it's trying to move upwards a bit. You see, it's now moving downwards because the market structure here was the market was going downwards. See, it was going downwards on the daily, right? It was going downwards, right? And then now it's going. It's moving upwards. It's moving upwards now. This is good now. It's moving upwards on the daily, right? This is the current market. I'm just analyzing. The market is now trying to move upwards. Okay? Because after going downwards, now you ask yourself, why did the market stop going downwards, then it started going upwards? It's because when I draw this rectangle, I draw it here. I draw it on the previous candlestick that shows sellers of the week. On the week, notice the week. I want you guys to see. This is something I learned. I'm not sure if it will apply to you guys, but something I told myself. Just draw a rectangle on the week, okay, and then same here to here. Draw a rectangle. See the market now came. See, notice where the market came. Now on the last, the market was going downwards, but why did it reach here? When you draw a rectangle from here to here and then just extend the rectangle, you notice something on the last sellers, on the last point of sellers. See, notice this week here. Notice this week here. Yeah, it was provided by the last bunch of sellers, although there's one here below, but this one was the reason why it came down. It came for the liquidity here, and then like it took the liquidity here, and now the market came for that liquidity. Now it's going upwards. Now, in order to prove that if it breaks here, I might think no, it went up for the close. When it was going upwards, it was going for the bias at this point here. At this point here, just draw a wick on one of the candlesticks at the top, on the wicks of the candlesticks. You notice a lot. You notice this is literally how it is. See, now it's trying to break. See, that's how when the market was moving upwards, it was going for the liquidity here. Now we go to the 4 hour time frame. This is just the daily. a short recommendation why they move. Just ask yourself, why did the market come here and then go upwards? Just when you ask yourself that question, when the market is on a downtrend, we look at what? The wicks on the previous side. When the market is on an uptrend, we look at the wicks on the buyer side, the blue ones now. The blue ones, we look at the wicks. If the market is going upwards, we look at the wicks at the blue ones. The closest blue ones. They'll tell you a story. It tells your story completely. It's amazing actually. Because notice here. Now we go to the 4-hour. Boom. Perfect. This is literally how it was. On the 4-hour, can we see? What can we see? Can we see the closest week was this one. The closest bias was this one, right? The market came to this region and then it just stayed there. Just came there, started weakening there from that region. Okay, what else? We draw a wick here from this angle to this angle. When you just draw a wick to the sellers, it just shows you a lot. Like here. This is where the buyers are. Say these are a lot of buyers and these are a lot of sellers here. There's a lot of sellers here and there's a lot of buyers here. Okay, this is buyers. There's a lot of buyers here. Okay, and there's a lot of sellers here. Sellers. Okay, this is something you just know that there's a lot of sellers here. Okay, because the market came here to the buyers, came upwards, and then it never went back to the buyers. Another set of buyers were born here. And how are these buyers set? How are these buyers born? It's quite easy. You just look at the previous week on the opposite, because this one I've drawn here. Now the previous week on the sellers on the opposite are here. Just draw it like that, and you notice something. This is where formation of the new buyers came in, just like that. See, just like that. These are now the new buyers. The new buyers here, and they came. Now the sellers here are getting dominated. As you can see, the current market, the sellers are getting dominated. I can't just enter here this market because I have to look at the time. It's not 17:25, bro. 17:25, bro. Like, no. I wanna see after an hour. Now I have to go to the 1-hour time frame to see what is actually happening here. And as you can see, a bunch of buyers are just calmed in the market. Boom. Breaking all those sellers. Now, will the sellers continue to stop, or will the market continue to go upwards? Because clear as day, we can see right now, there are sellers here who are getting taken out. It's crazy, right? And then here's a liquidity zone, meaning you still have to be cautious here, because once the market reaches this zone, it can even start going downwards. And see, it has already started going downwards because of the wicks here. The wicks are here, man. Look at that. Look, the market has reached there, and now the liquidity. This like money is here to be eaten, and it's getting eaten right now. It's getting eaten. Now I don't know if it surpasses this box, we can enter buys until maybe, because we're dealing with 1 hour, 4 hour, and like the other hours. See how the market is. Market is just here. Now, when we go to the opposite, we draw say from this week, from the seller, no, from the buyers. Even the buyers is okay. We just draw a rectangle from this week. You notice a lot. Actually, notice a lot, bro. You notice a lot. Let me remove this so that you notice what I'm seeing. Yeah, something like that. Perfect. Something like that. Yeah. Now the buyers here, I want them to reach here. If they surpass here, I'll go for buys. If this rectangle that I've drawn, The rectangle I've drawn is from the opposite for the buyers here. And why have I drawn this buyers? Because when the market came, when the buyers were here and the sellers are now, there are another bunch of sellers here. From this is the two sellers. The two sellers are here. Like the two main sellers are here on this region. Why? Because let me remove this so that you can understand. Let me remove this because when the buyers were here, well, let me remove this and let me remove this. When the buyers were here, when the market was opening here, it went straight to the sellers here. This sellers. The sellers tried to push it down, but a new bunch of buyers were formed from this angle, this angle here. We look at the black candlestick from this angle. A new bunch of buyers were formed here. New bunch of buyers were formed there. And as you can see, these are now the new bunch of buyers. Let me shade it into a bit red there. This is now the bunch of buyers. A new bunch of buyers were formed there. Okay? Where they said, hey, we don't want you to reach we don't want you to go beyond this point, okay? We want you to go upwards, okay? And now when you're going upwards, you notice there's still those sellers here at the top, okay? If they break these sellers here at the top, we'll go for buys from here up to maybe this center, this point here, maybe this point here. Wait, let me maybe this point here. Yeah, we'll go for buys from here up to here, or even up to here. The closest buyers is here. The closest buyers is here, up to there. That's the closest buyers, because we're going upwards, so we're going for the closest blue one, not the black one. If we're going downwards, we'll be going for the black one, but now we're not going for black one, we're going for blue ones. So if it surpasses this point here, let me even put an alert here. I right click and I say add an alert on Excel USD. I draw and I put it somewhere over there. Now if it surpasses here with a wick, with a full body, not a wick, with a full body. When I'm talking about a full body, I'm talking about something like this. See this here, this is all blue, this is not the body. And then the candlesticks are not the wicks. Now if it surpasses here with a full body, I might go for buys. I'm not even gonna lie, I might go for buys from here to until here, until this region here, because there are sellers here waiting for the market to be taken, to be reached, and then so that they drop the market. So my end goal is I want a full body. Let me even move it a bit upwards there. I want a full body here so that I enter the market. Then my TP will be here. My take profit will be here, and my stop loss will be below this rectangle now. This rectangle below here. So the market will be like, if it's going to break this region, I'm gonna go for a long here. Okay, and then my trade will be something like this, and then just do something like that. See, an RR of 4:14, which is quite amazing, by the way. If it breaks this region, okay. If it doesn't break this region, I'll wait it for it to break this sellers, this point of this bunch of a bunch of sellers here. I think this will be the point where I'll wait for it to break. Once it breaks here, I might go for selling here. I think it will be here. Yeah, it will be here. If it breaks this region, that's literally how I trade. And then it goes to the nearest black ones. So the nearest black ones will be somewhere over there. The black candlestick, the sellers will be somewhere over there. That would be how to enter this trade. So let me even shade here. Okay, that's how it should be. You see, if the market breaks this point here with a body, a full body, I'll go for buys. If it breaks here with a full body, I'll go for sells. So this is now consolidation, what I was talking about. The market here is just consolidating. I want to see which area it will go. If it breaks it here with a body, I'll go for buys. If it breaks it here down with a body, I'll go for sell. This is now a consolidating market. Literally, that's literally how to trade. That's literally how to analyze the market. And I hope you don't get lost by this. I really do hope you don't get lost. It's a bit complex, but this is how I would analyze the market. Just know where the sellers are, know where the buyers are. If it's consolidating, right now I'm not trading anything because it's consolidating, just going up, down, and then going up. I want it to break at least something. I want it to break here with a body and see the movement, and then, or even break here with a body and see the movement, so that I can say, am I going for buys or am I going for sell? That's literally how it is done. Uh-huh. And that's how it's done. I hope you've learned something. I hope you've understood something. I'm just, that's how it's done. You.